Hi, Assalamualaikum everyone. This video I will explain the currency derivative market. This is chapter 5 under code FIN542 International Finance Management. Okay, what we will learn in this topic. Okay, first of all, what is a derivative? Okay, this is derivative, a financial security with a value that is reliant upon the derived from an underlying asset or a group of assets. Okay. Actually, the derivative itself is a contract between two or more parties, and derivative derive its price from fluctuations in the underlying asset. There are a lot of various assets, other than currency. So the most common underlying asset for derivative are stocks, bond, commodities, currencies, interest rate, and market indexes. And these assets are commonly purchased through brokerage. Okay, so these are the example of the derivative. We have stock, bond, commodities, and all these are the underlying asset. But for this chapter, we just focus on the currencies. Okay, so let's look at okay, these are the underlying asset and derivatives. For currency, we have for AUD per USD currency, we have AUD per USD forward contract. Okay, but for crude palm oil, we have crude palm oil futures. FB and KLCI, we have KLCI index futures. Okay, 5 years MGS, which is the bond. Also, we have MGS futures. Okay, so these are the derivative for the underlying assets. And this we have several types of derivative. The first one adalah forward. Okay, what is the forward? Forward is actually the contract or agreement to buy or sell specific currency. Okay, currency ataupun underlying asset at specified future date, and for forward at a predetermined price agreed by the buyer and seller. Actually, for this forward, we already have the predetermined price agreed by buyer and seller, and this is privately negotiated between both parties. For the future, okay, what is difference? The future and forward. For future, also a contract or agreement to buy or sell specified asset at specified future date and at settlement price. Okay, for futures we have settlement price. This specification of the contract have been standardized and both have to fulfill the agreement. Okay, we have standardized here, the key point here, and at a settlement price. It differs with the option. Option pula, it's a contract or agreement to buy or sell specified asset at specified future date and at a predetermined exercise price. Okay, for option we have exercise price, and the specification of the contract can be standardized or negotiated between buyer and seller. The difference for the option is the buyer has the right to use or exercise the option or not, and only seller has to fulfill the agreement if it is exercised by the buyer. Okay, for the option, the trader have the option to use the options or not. Okay, but the future, we don't have the option. You have to use, you have to settle at the settlement price. So ini adalah contoh-contoh derivative forward, futures, option and swaps. Untuk swap ni kita tak cover lah. Okay, these are the basic differences between forward and futures contract. Okay, dari segi definition, you already know the future. For the futures, agreed, okay, contract which parties agreed at a settlement price. Okay, as compared to forward, agreement between parties at a specified date and agreed rate or price in the future. Okay, dari segi size of contract, we have standardized contract, but for forward, it is individually tailored, which can be much larger compared to futures. In terms of trading, For the trading, we have the organized ataupun central market for the futures. For example, New York Mercantile Exchange ataupun Chicago Mercantile Exchange. But forward, we can just trading over the counter. Okay, refers to the process of how securities are traded for companies that are not listed on a formal exchange. In terms of settlement, okay, settlement contract settlements are marked daily via the exchange clearing house. And the contract settlement occurs on the date agreed on between the bank and the customer. And in terms of regulation, for the futures, regulated by the Commodity Futures Trading Commission. But for forward, it is self-regulating. Okay, another difference in terms of delivery date. In the futures, we have international monetary market. Okay, so IMM futures currencies are available for delivery on only a few specified dates a year. For the forward, bank offer forward contract for delivery on any dates. In terms of transaction costs, brokerage fees. Brokerage fees for the futures for buy or sell the orders, but for the forward, the cost is based on the bid-ask spreads. In terms of default or credit risk, for the futures, credit risk is low. The existence of clearinghouse acts as the counterparty to both the buyer and seller of this contract. And for forwards, borne by each party. High risk as one party may not fulfill the contract. And in terms of margin, we have margin in the futures, but for forward, margin is not required. Okay, let's look at what is margin? Okay, margin, when the trader enter into currency futures contract, he is required to pay to a broker a deposit. Okay, this deposit we know also known as initial margin. Okay, the initial margin can be described as a certain percentage of a contract value or certain amount of money per contract. Some transactions, some features, we have maintenance margin. What is maintenance margins? Maintenance margins also imposed on the trader to ensure that this account will not be negative. This mechanism by clearinghouse to ensure that trader will not default. Okay, some trading, some transaction, we have maintenance margin, so the trader should add the additional capital if the margin below a maintenance margin. Okay, maintenance margin is not an additional amount of money to be paid to the broker, but it is a level of margin. Kita boleh cakap maintenance margin ni adalah benchmark. Okay, dia dah tetapkan 1,000 for example. So, your margin after profit or loss, after the fluctuations of the currency, your margin cannot be below maintenance margin. Tapi itu bukanlah additional amount. And you have to add to the initial margin. Okay. Usually the maintenance margin is about 70% or 80% of the initial margin. And then margin call. Margin call will be required if trader's margin account falls below the maintenance margin. Okay. Alright, the basic function of derivative. Derivative can be used to hedge a position. Okay, for example, forward contracts normally used for this purpose. MNC ataupun business use forward contract to hedge against the depreciation or appreciation of currencies that will affect their company's profit or loss. Another function is to speculate on the directional movement of an underlying asset, whether short or selling position or long ataupun buying position. Okay. For example, futures contract normally used for this purpose, and speculators use this derivative to make profit based on the movement of the currency. Speculators will normally try to make profit by buying and selling the futures contract itself. That is why futures contract seldomly reach the expiring date compared to forward contract. Once the targeted profit or loss has been hit, the speculators will close out and settle the contract. Okay. Okay, now let's look at the mark-to-market position. Market-to-market refers to the daily settling of gains and loss due to changes in the market value of security. Jadi, the trader's floating profit or loss will be determined or kept on track by the system on the daily basis. However, the floating profit or loss will be realized once the trader settles his position. However, if the loss incurred reduces the current margin below the maintenance margin, the trader will get a margin call where he needs to put additional capital to reach back the initial margin. For example, if initial margin 2,000 and then the margin call, the maintenance margin is 1,000, for example. If after the trading you get the loss and you will get negative 500, for example, because negative 500 is below than maintenance margin, so you have to add another 2,500 because to get back to the initial margin which is 2,000. Jadi bila you dah dapat margin negative 500, you kena tambah lagi 2,500 to get back the initial margin which is 2,000. Okay, get that? Okay, let's do a few exercise on speculation of currency futures contract. Jadi kita tengok dia ada short position or long position. Okay, for example, a currency trader took a short position on 3 GBP 5,000 futures contract that will mature in 3 days time. The opening was $1.85 with the closing price in the next 3 consecutive days 1.8, 1.88 and 1.82 respectively. If the current margin of the traders is 10,000 US dollar, show the daily market to market settlement process and calculate the trader's profit or loss on the futures trading on day 3. Okay, dia dah bagi tahu siap-siap on day 3 calculate the trader's profit or loss. Okay, jadi dia dah bagi dah opening price and the next 3 consecutive days closing price. Jadi sekarang ni this trader took a short position. Why he entered short position? Because he expect the US dollar will appreciate and GBP will depreciate. He can sell USD now and buy back later. Okay, and gain profit. Okay, so kita start dengan beginning. Okay, this is the market to market. We have column of day, prices, floating profit and loss and margin. So for this question, margin is 10,000. Jadi you will start for this one is the beginning of day. This is the opening price. This one is closing price. The same day. Okay, opening and closing. So the price for opening is 1.85. Jadi short position we have to sell USD and buy back later. Jadi kita sell 1.85 dengan margin 10,000. For the day 1, okay, day 1 the closing price is 1.80. So to calculate the profit, selling price minus buying price. So this is the selling price 1.85 and buyback minus dengan 1.8 times the number of contract which is 3 contract. The size of contract adalah 50,000. So bila you darab sini, you will get USD 7,500. Add with margin, initial margin. So the current margin will be 17,500. And proceed to the second day. The closing price is 1.88 and when you calculate the floating profit or loss, because of the currency is depreciate, so it is loss. Okay, loss of 12,000 US dollar. And when you add with the additional with the margin before, you will get 5,500. For this question, they have no maintenance margin. So you just proceed with the day 3. The closing price is 1.82 and the profit is 9,000. Okay, after you can see here the currency is appreciate, so you will get the profit, and we add with the previous margin, you will get the ending margin is 14,500. Okay, and then to calculate the profit, there are two ways to calculate the profit. First, you can make a sum for this floating profit or loss. So 7,500 minus 12,000 plus 9,000, you will get US dollar 4,500. Okay, you can double check with the second way of calculation, which is ending margin minus dengan beginning margin, 14,500 minus 10,000, so you will get 4,500. So if the answer is similar, the probability of you get the correct answer is high. Okay, mesti dapat sama. Kalau you tak dapat sama, check balik, mungkin ada tersilap kira. Okay, and then settlement of selling would be 1.82 times 3 times 50,000, you will get 273,000 US dollar. Okay, so this is how we calculate the futures for short position. Okay, another way to find profit or loss, you can have on the beginning of day 1, you just calculate the number, the value of contract you sell by using USD 1.85. You will get 277,500. On day 3, you will get 273,000 US dollars. So the difference is the profit 4,500. So now we have 3 ways to calculate. Jadi kalau you calculate using 3 ways and get the similar answer, maksudnya betul lah tu apa yang you jawab tu. Okay, this one step, one way, second way and third way. Okay, let's look at the long position. Okay, for example, assume today's settlement price of a currency future contract is 1.8530 per GBP and investor buy 3. Okay, 3 contract which is the size of 62,500. Maturity in 3 days. And the margin account currently has 3,000. The next 3 day settlement is as follows, and calculate the changes in the margin account from the daily market to market, and the balance of the margin account after the third day, and determine the net profit or loss to the investor. Why this trader choose long position? Because he expect the USD will depreciate and GBP will depreciate, so he can buy USD now and buy back later and gain profit. Okay, so here is the how to calculate the long position with the initial margin 3,000 with the price 1.8530 on the day 1. Okay, this is the the opening price of day 1. You can write as 0 or 1. Okay, for day 1, the currency depreciate to 1.8540. So bila depreciate, we can expect this trader will get the profit. Okay, jadi macam mana nak calculate? Selling price minus dengan buying price, 1.8540 minus dengan 1.8530 times number of contract times contract value, you will get 187, and when we add with margin, you will get 3187.5. And for the day 2, the price is 1.8470. Here the currency is appreciate, meaning that you will get the loss. Okay, so 1.8470 minus 1.8540 times, so you will get negative 1312. Okay, see, negative, you get loss, and after you calculate with the margin, you will get 1875. Again, this question also don't have maintenance margin, so you just proceed to the next day. Day 3, 1.8515. We can see that the currency depreciate, you will gain the profit. So after calculate, the margin should be 2718. Okay, and to calculate the profit, you just make a summation of floating profit or loss. You will get negative 281.25. Okay, ataupun ending margin minus dengan beginning margin 2718 minus dengan 3000, you will get 281. And the settlement of buying, you just take this value times 3 times 60 times contract value, so you will get 347156.25. Okay, and another way to find profit or loss, you have to find the value of contract at the beginning and the ending. So 3477,435 and minus dengan 347156, you will get negative 281.25. Okay, so that's how to calculate the long position. A little bit different with the short position. Okay, in terms of you find the difference selling price dengan buying price. Okay, so you can make a exercise December 2019, June 2019, and December 2018, and we will discuss in the tutorial class. Thank you for watching and all the best to all of you. Bye.